Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. If you're new to the channel, please subscribe so that you do not miss future videos. Also, click that like button to help grow this channel and get the word out on dividend growth investing. Getting paid just for owning stocks. This is what dividend growth investing is all about. In this video, it's going to be a complete departure from what I usually do, which are monthly recap videos of all my dividends or my weekly buy videos. And I realized I've been doing videos for over 2 years now, and I've never explained the why. Why am I invested in dividend stocks? And I'll take you back to the start of my investing journey. It began in the mid 90s, and I really didn't know a whole lot about stock investing. I knew stock prices went up, they went down, and I even knew back then that stocks did pay a dividend, but my main focus really was to buy a stock low and then sell it high and then get a profit from that. And that's how I thought you made money in the stock market, and you sure can do it that way, but there's other strategies to do as well. And for me, I think this is a little bit risky to just invest only in growth stocks. And I think the mentality of most investors, especially today, is really broken. I think just from talking to people online or in person, I think most people just want they want to 10x their money. They want to invest in the next Bitcoin, the next Tesla 15 years ago, or Apple, and just get rich quickly. Nobody seems to want to get quick, or nobody seems to want to get rich over time and patiently with a tried and true way. And I think investing in dividend stocks can certainly get you there. And make no mistake, I do invest in growth stocks, but I don't invest in them individually. I invest in index funds like VTI and VU quite heavily. They're very large positions in my net worth, and I have a Vanguard account. And what I'm showing right now, this is my M1 account, but this is my taxable account. But I also have an IRA over here, and I'll show you that I do have a pretty significant amount in the VTI and VU, as well as SCHD. You could call these diversified ETFs with 100 plus different positions in them. SCHD has over 100. VTI has around 4,000, I think, at the last count, and VU is about 500. So as you can see, I'm invested in dividend stocks as well as these ETFs. Let me go back to my Average Joe Dividends page here, and I have these different slices. I do have some ETFs in my taxable account, but the rest of these are all individual dividend paying stocks. And the reason why I changed my philosophy a little bit was just seeing a lot of market drops. I've invested through the 2001, the tech bubble burst, as well as the Great Recession, and I saw my net worth plummet through those times. And I also heard people who were close to retirement age saying that they were going to have to wait possibly years extra. They're going to have to work extra in their careers just because of what the market was doing. And to me, that's a little bit scary, because we can't control what the market is doing. And I did not want to be beholden to the stock market to determine when I could retire. So that's when I started doing this individual stock investing and concentrated more on my cash flow. And for me, even if you look at historically, even in down markets, even through the Great Recessions or whatever the market is doing, companies like Johnson & Johnson, Coke, Pepsi, Home Depot, Lowe's, they've been paying their dividends no matter what the market is doing, and they've also been increasing their dividends over time. And let's just take a look at like Lowe's. And I think a lot of people, they get afraid of investing into dividend stocks such as Lowe's because it doesn't pay a very high yield. I think Lowe's it's under 2% right now. I'm going to jump over to dividendinvestor.com if it will cooperate. I think it's like 1.8ish for them. We see, yeah, it's about 1.8. It's definitely under 2%. And I think a lot of people will say, well, I'm not going to invest in Lowe's. That dividend yield is too low. I will require too much money. But over time, Lowe's has been increasing their dividend payout. You can see their 5-year average, 3-year average of how much they've been increasing that dividend for. And I'm just going to show you a quick example of how quickly, well, over a 20-year time period, what Lowe's dividend yield is, what your yield on cost would have been if you would have started buying Lowe's, say, 20 years ago. And I'll go to Yahoo, and I just pulled up their cost from July 1st, 2003. I'm going to pull up a calculator, and what I'm going to do is I'm going to divide the quarterly price. Actually, let's do the annual price, because we have to divide the annual price divided by the share price back in 2003. So this is the quarterly price of $1.10, which makes an annual rate of $4.40. I'm going to pull up my calculator. We're going to do $4.40 divided by, we'll go to that rate, which was $21.41. And we'll see what your yield on cost would be if you would have bought and hold Lowe's stock back in 2003, 20 years ago. Your yield would be over 20% on what is considered a very low yielding dividend stock. And there's also another thing people will say, that I've seen people say, or just online, is that dividend stocks don't grow as fast as the rest of the market. And while that may be true in some cases, it's not true in all cases. Let's take a look at, I pulled up some of the stocks that I'm invested in compared to an index, a popular index, which is the Vanguard Total Stock Market Index. Let's go back 5 years and take a look at the Vanguard Total Stock Market Index. And we can take a look, and we can see that last 5 years, VTI has gone up 55%, Home Depot has gone up 62%, Costco over 150%, Apple over 300%, and Microsoft over 200%. So you can see you still get some growth with these stocks, so you're really not missing out. And I would recommend you, when you build a dividend portfolio, and I've got I'm at 70 different positions right now in my portfolio. So I've got a mixture of these stocks. You can see Apple and Costco right up on top. These are good growth stocks. Something like a Black Hills Energy, that's an energy stock. It's not going to grow so much. It's going to be a little bit more of a yielder. You'll get some tiny growth over time. And I've got stocks like a Johnson & Johnson here. These have some growth with some good dividend growth in there as well. And Johnson & Johnson has been a steady Eddie paying a growing dividend, I believe, for over 50 years now. And another reason I like to invest in dividend growth stocks is progress. And while we can't control what the stock market is doing, we can control how much we're investing into our dividend growth portfolios. And as long as we are buying more and more shares of dividend paying companies, our income is going to go up as a result. And I'm just showing you a tracking sheet that I show in my other videos, and I'm just going to go to the dividend tracker sheet, and I'm going to show you the progress that this portfolio has made since January of 2021. You can see the value, and here's the dividend that I've received for each month, and you can see how this has gone up on the quarter-on-quarter increases. I've put a quarter-on-quarter increase percentage and the dollar amount as well. And here is something I track, the average monthly dividend, and I think this is really important because this is kind of like a paycheck, and we can see where I'm at right now, starting from the $50 back on May of 2021 when I started tracking this, and I'm over now $823, and you can see I've really slowed down my deposits, and I'm still getting good increases per month. Of course, there are some times where there'll be a decrease, and that was because of SCHD announced a lower dividend for March, but that is typically what that ETF does, and then it starts increasing that dividend in the second, third, and fourth quarters. And I click the next tab, the monthly average dividend tracking tab, and I keep a ledger of every single change that happens, tracking progress and a little bit of regression when like a JEPI lowers their dividend. And what causes this to change are when I deposit money into the portfolio, as well as dividend drips. And my strategy right now is to reinvest every dividend I receive back into the company from which it was received. And you can see here was a Qualcomm dividend increase. So this was no extra money deposited by me. It changed my income by 11 cents just for Qualcomm, a pretty small position in my portfolio. Just by them increasing their dividend, you could see my monthly income went up by that much. You can see that was the SCHD decrease in March, but you can see we've had mostly increases with the exception of JEPI here. JEPI again and JEPI again. But you can see just recently though, just in July, these are all the different things that have slowly increased my dividend income. And I'm going to bounce back to the dividend portfolio tab here real quick. Another reason why I like investing in dividend paying stocks, and a lot of them, is I'm getting paid every couple days, and sometimes I'm getting paid multiple times per day. You can see on the 5th, 3 dividends rolled in, and my last dividend here was from the 20th. I have just a few more dividends left to close out the month, so I like this constant cash flow coming in from a lot of different sources. And so if something were to happen to one of these sources, I've got all these different backups for them, so I don't think my dividend income is ever going to go to zero. And I know some people will argue that in a taxable account, investing in dividends is not a great idea because of the tax implications. And while that may be true, I think it's a good problem to have, because you're going to have that cash flow if you really need it. You never know, with all the layoffs that have been going on, especially in tech. It would be nice to have a little bit of a backup. And in my case, with my monthly income, I've got an $823 backup to help me out. And also, if you are pursuing early retirement or financial independence, you can't have all your money locked up into a home and into just your 401k. Those are pretty much untouchable unless you tap into that 401k, pay that 10% penalty, or you sell your home and cash out and then become a renter. Otherwise, you're really stuck. So to me, I would rather pay a little bit in taxes to have that security and also that ability to have that financial independence, as well as possibly retiring early. So let me know what you guys are investing in. Obviously, if you're clicking on this video, you do have an interest in dividend paying stocks. And while I do invest in dividend paying stocks, again, I invest into a 401k with every paycheck. And that is, I primarily invest into VTSAX, which is quite popular, and that's just the Vanguard Total Stock Market Index. So I'm investing into that every month. I'm also reinvesting dividends I have a Vanguard account as well. And what I do is I've got an IRA. You can see these are all ETFs, and I am reinvesting those dividends back into these ETFs. So that's pretty much what I had for this video. I couldn't believe I hadn't explained this before, of why I'm investing in dividend paying stocks. Let me know in the comments below what you think. I know there's probably more advantages and disadvantages. I probably didn't catch everything, and I probably didn't get all of my ideas out there, but I think this would be a good start. And let me know in the comments below what you guys think. Thanks for sticking to the end. Please click the like button if you got value from this video. Also, please subscribe so you do not miss my Monday buy video, where I'll deposit $100 into my account and I'll show you where that went to. And I also do a monthly recap of all my dividends. Everyone have a great weekend and take care.